let's go this direction. So the purpose of today's talk will be to discuss candlestick patterns, the anatomy of candles, the emotions of candles. We'll look at a couple of reversal candles, momentum, indecision, and then last but not least, we'll look at how we can trade with these concepts. Also, since there's so few of us here, I actually encourage people to talk during this one and ask questions whenever you have them. It shouldn't be too bad. So let's get into the anatomy of a candle. And I've kind of talked about this a little bit, but it bears really repeating and understanding. When we look at a candle, and the real thing behind it is why. Why are candles important? I know so many people who trade with just line charts or don't look at charts at all. And they're missing out on some really valuable information, or alternatively, information that could be made really simple by understanding how these candles work. So when we look at a candle, it's important to understand what we're seeing here. So we have these two wicks, right? And the wicks represent both the high and the low of the day. Then inside of those two wicks, we have what's called the body of the candle. Now, depending on whether or not this candle is opened higher than, has a close that's higher than the open, or has a close that's lower than the open, that will determine whether or not the candle's color is changed. Or some charting software allows you to have hollow candles. Some have red, some have green, some have black, some have white. It is important to understand what that means for each broker and each specific charting software. But here we're seeing that this white candle represents that this open was lower than the close. This was a candle that showed that we had growth. So what can we determine from even just a candle like this, right? We can determine, well, that the low of the day was lower than we opened. So that means we opened and went down at some point during the day. However, as the day progressed, or as this time period progressed, we now have a close that is higher than the low of the day, and we also have a high that is higher than the close of the day, right? So this candle shows us, and oh gosh, I wish I would have thought about how to draw along with this, but this candle shows us a lot of information in one really simple graphic, right? We could even see that zigzag where we had an open, we went down, we had a high, we went down from our low to our high, and then we came into our close for that time period. And I'm going to keep on kind of reiterating this and going back over it because I think this information is really the key heart of what I want to get in today. So once again, the body of the candle represents the space and distance between the open and close. Right? Now, sometimes candles are all entirely body, and that also has its own meaning. But just in general, when we look at that candle, we can see that the body says, hey, we did not open and close at the same space. Now, there are a number of names for this part of the candle, and it's sometimes called a shadow or a wick or a tail. I commonly use wick, but that's not important. And those are the long lines that come above and below the body of a candle. And like we said, those are going to represent our high and low for the day. So just because we have a candle that has a no wick or a long one, we can determine a lot from that. Either, hey, the high and low of the day are right in line with our opening and close price. That's a really confident buyer who's going to buy directly into the high or low of the day. And alternatively, we sometimes see candles with very long wicks, and those are also really indicative. Those can tell us, hey, you know what? People tried to sell off, right? We had a very low point in that time period, but the pressure has brought our price farther from the high or farther from the low. So these wicks are also really important and can give us a lot of information. And this is kind of just going over what I just said. The upper shadow is the high marked by the topmost part, and I'm sure we'll talk about, okay. So a hollow body candlestick. And in this example, this is when the stock closes at a price higher than the opening price. The body is white, although it can be green. Sometimes they're just hollow on the inside. And the bottom of that body depicts open price, and the top shows the closing value of that stock, right? So automatically, the colors of our candles are becoming very important, even as I'm explaining this, right? There's so many different brokers and different softwares, but at a glance, the beauty of a candle should be able to tell you whether or not we opened or closed higher. And why is that information valuable? Well, so many times I talk about trading with the trend, right? Trading with momentum. And you know, people just enjoy seeing green. We associate green with money. So the idea that you can look at a candle and say, hey, there is momentum. You know how I know? Oh, well, we are opening. Our close is higher than our open, right? We started our day, let's just say, whatever, at $5, and we ended the day at 10. If you do not know which one of those is the open and the close, you might think, hey, we started at 10, we ended at 5. And that information is obvious from the color or hollowness of the candlestick. So immediately, this hollow candlestick is very important just off of that information alone. Now, filled body is the same thing, but the opposite, right? So the filled body is going to tell us when our close is lower than the opening price. The body will be black. Sometimes it is red. And once again, now the top is going to be our opening price and the bottom is going to be our closing. So these are things that you really want to know with your broker. And when you're looking at these candlestick patterns, without even really taking into account the specific prices, but hey, is this momentum positive or negative? So here's that same example, but with different colors, where we're using green and red. And on a lot of my charting platforms, I think I see green or red more commonly, but that just depends on what you use. I know MT4 uses black and white, and it just varies. These are things that you can actually set inside of your broker and your settings. But look, we have two candles that if we did not have color and we did not know, they would look very similar. But they tell us two completely different things. So this green candle here is telling us that our open and our close our open is lower than our close, and that we have our low and our high as wicks moving out farther from that. And the red candle is telling us the exact opposite, right? And these would both be different indicators in terms of whether or not we're going to put ourselves into position to make a trade. And then the last candle that you can see here, and I don't know why am I zoomed in like this, is called a doji candle. Oh my gosh. There we go. It's called a doji candle. And that is representative of having an open and a close that are very near to the same price. Also a very indicative candle. A lot of times when we look at this, I see that as saying indecision. And it really talks about the emotion of the market behind what these candles are. And I think that's what we're about to talk about next. Cool. The emotions of candles. Right, so once again, I'm just such a firm believer in the value that you can get from looking at a chart like this, and specifically over line charts. And why? Well, we can gain so much information in terms of how the buyer or seller on the other side feels, and us as a group, right? So we can look at the distance of the low of the time period to the close of the candle to show buying power, or alternatively, the distance from the high of the period to the open to show selling power. Right? And now, as we look at this filled candle, we can see that our buying power has brought us from the low of the day up until the close. And alternatively, it's the same thing. That on this right side with our hollow body candle, showing that the close of the day or this time period is higher than the open, this buying power that we have down here at the bottom has brought us all the way from our open. We sold off, we went down to this low, and we came and closed significantly higher from the low and also above our opening price. This is actually a very, very bullish sign. And it shows the sentiment of the people behind it, right? It doesn't matter how low that price went. People were willing to buy at every level. This can inform our trade. And the same thing with the other side. right? Or if we look at it from the top side down now, we can look and say, hey, we opened here. We came up to a high, but the selling pressure was so strong that they were still able to bring our height of the day down past our opening price all the way down, to a close. That was significantly lower than the open, shown by the size of the body of that candle. And all of that comes just from looking at it. I can't see any prices here. I don't know the context of anything else outside the candle, but these candles are telling me a story, and it has to do with the emotions of the people behind it, or it has to do with, the thought process. So another thing we can see is just purely off of the size, right? The size of a candle can represent how many people. It can be somewhat of a volume indicator, but also just shows how much of a price people are willing to move through on any given time period. Well, when we have small candles like this, we can say, hey, you know what? And you'll look, and as we look at the chart, the volume will add up to this too, right? We have these small candles. Well, there weren't that many people trying to buy or sell. Or alternatively, the buying and selling pressure was absolutely in the middle. There was no imbalance in that, right? These people met, and that price that they hit, hey, we closed very close to where we opened, whether it was red or green, right? And these are doji. This is showing me indecision. However, when we look to the right here and we see these larger candles, well, that shows me that not only were people willing to buy, but they were willing to buy through many price levels. They were willing to buy at a large amount, and that's how we get these larger body candles. And I know it seems just very basic and redundant even, but this information is important. This information is indicative and can help you in terms of entering, exiting, and just understanding where you are inside of a trade. Now, very important to say, because I know that people are going to look at candles after this, it's important to know that this isn't the only thing that I use, right? And I'm not saying that this is the tell-all way to understand how to read a chart. This is just something that should be going on in the background as you're continuing to do your fundamental analysis, as you have your price targets based off of other information, support and resistance, whatever it is. But as you're inside of the trade and you're looking, hey, how do I feel about this? How's the momentum feeling to me? What are these candles looking like? Can definitely at least give you confidence to stay inside of a trade, or give you confidence to believe in the power of your technical setup or fundamental setup. The word I used here is the size of candles can show exuberance. People are excited to take positions inside of something that has a candle that's going up like that, right? So, doji candles. Doji candles are another huge indicator and are one of the most important candle shapes, at least in my trading style and a lot of people's. And you can trade purely off of the idea of dojis, especially if you're going to use them on a weekly or monthly, even a daily chart potentially. But the doji candle says, hey, the difference between the people who were buying and selling on this particular time period is tight. We have not decided on a direction yet. Now, a doji after a long run of momentum where we had a large uptrend and then we see that indecision, that can say, hey, this might be a time where the sellers are starting to keep up with the buyers, and that buying pressure will not be enough to raise this price. And it's the same thing when we see that reversal pattern where we can have a price that is going down. We have multiple red candles coming down, and then we see a doji and it says, hey, now all of a sudden the buyers are starting to outweigh the sellers. Our price movement is not at the same level. And in this particular chart, something that I like is that they have used this doji as not only an indicator, but also to place the trade. Hey, because I know that we have a doji that regardless, even if it was just a little bit of space, that we closed underneath the open, and I'm looking to take a short position, well, I would go to the high of that day, to the high of that time period, and I can set a stop loss. And I can enter if we break beneath the low of that time period, and the opposite for a bullish doji. Now, I'm not saying that we should trade off of dojis, but there's just potential information there. if you're looking to, I know so many people struggle with, hey, where do I put my stop loss? How do I know where I should enter, right? And you can start to gauge and have lines and places where you can say, well, we broke past this indecision candle. We broke past the high on this indecisive day where people were struggling to see whether or not we were going to have a higher number of buyers or sellers. So here I have kind of just a list of reversal patterns, reversal candles and the patterns associated with them. And I'll kind of talk a little bit about each of them. And then also, once again, I really want to just tie this back into actual charts so as to not stay in theoretical land forever. So let's see here. So the number one candles that I see and people look for a lot are called a hanging man or inverted hammer, right? And these are candles that happen at the end of a momentum trend where we're either going up or going down. They have a small body that comes over the top of the pattern and a long tail that comes down. And when we see patterns like this, when we see a candle like this at the top or at the bottom, once again, of an increasing or descending pattern, they have the potential to show reversal, right? And what is this actually saying? Well, it's saying, hey, we opened at a certain place. We had an extreme low, but at the same time, we came right back up past that low and closed higher than the open. Now, if this is at the top of a pattern that is ascending, that is going up, this could say, hey, people were trying to continue bringing that price up, but we had a large amount of selling pressure that took us right back down. Now, we didn't close there, but it still shows a large amount of indecision and can say, hey, this trend might not be continuing, right? And sorry, at the top of our ascending pattern, it would probably look like this red candle here instead. Where we have a open and we had a low that is extremely low and we came back and closed beneath the open. And this would once again be the potential for a reversal here, right? And same thing at the bottom of a pattern as well, where we can be descending and see, hey, you know what? Although this price is going down, we have an open that is lower than our close, so we closed higher than our open, and we had a lot of buying pressure. People tried to push the price up. This might say, hey, the buying pressure is about to start outweighing the selling pressure, and might be, once again, a signal that we're looking for a reversal pattern. Now, other patterns that we see are a shooting star, which is kind of a similar thing to a hanging man or this inverted hammer, right? This is a small candle with a large wick that happens at the top or bottom of any trend. We can have bearish engulfing patterns, and I'm going to spend a decent amount of time talking about engulfing patterns. Oh my gosh, what is it with this zoom in thing for me? So bearish and bullish engulfing patterns, and I think I have a whole slide about this. So let's keep on going and see if we can get to it. Oh my gosh. Oh my gosh. 1 second, you guys. Okay, so engulfing patterns. Now, engulfing patterns are one of the easiest candle patterns to look at and recognize, and they're very important because they can show us, hey, not only they just show price strength, right? So we have a red candle here. Our open is higher than our close, and that just off the rip shows us that we're having a bearish moment, right? The price is going down. We are closing lower than the price that we opened at. And when we have this engulfing bullish candle that not only it opens underneath the close of the previous candle and closes over the open of the previous candle. This is something that shows us a high level of conviction. It says, hey, not only were people willing to buy underneath the low of yesterday or the last time period, but that buying pressure was so strong that it took us past all of the price points inside of our previous candle. Now, there are even larger bullish engulfing candles where we might engulf more than the low of the previous day. We might engulf a number of previous days, right? And that's something that we'll see in our charts in the future as well. The more engulfing, the larger that candle is, the larger of a signal it says that this might be a really good buying opportunity. The larger of a signal it says that we are looking to uptrend and to change the direction of this trend. Now, it's the same thing for a bearish engulfing candle, right? But the opposite. So this bearish engulfing candle says, hey, these people, not only did we open higher than the close of the previous day, but they sold all the way past the open of the previous day as well. And it just shows a lot of conviction. It is a strong thing. It is a strong sign that we might continue to have more downtrend after that. And so here we go. It's just a deeper explanation on that. So once again, you have this bearish candle here, and the top is the open and the bottom is the close for the day. Now, the engulfing part of it means that we were larger than the previous candle on both sides, right? This bullish candle, it opened lower than the bottom than the close of the previous day. It can open at or below, but we would like to see it be completely larger and engulf the entire price action, right? So this opened lower, and that did not stop people from buying. They looked at that and said, hey, this is a great opportunity. And they bought all the way past the open of the previous day and closed at a significantly higher level. And any sort of higher level, all of a sudden this will set algorithms off, right? And it's the same thing for the bearish candle. So once again, we have a close. We have an open for this candle that is above the close of the previous day. And that price action carries it all the way below the open of the previous day where we closed lower, right? And that's the definition of engulfing. This thing has swallowed up all of the previous price action and almost invalidates the market sentiment from the earlier day. Now, here's just some examples of looking at momentum and how you're going to gauge momentum just purely from looking at candles. And it's not complicated, right? The size of the body of the candle is very indicative of where we're at in terms of momentum. So when we have these large candles, these large bodies, it automatically says, hey, there's a lot of momentum, there's a lot of exuberance, and people are excited to buy through whatever price targets or periods that we're at. As the body of the candle gets smaller, we can at least start to say, hey, I know that these people are not willing or they are just not buying through different price levels. Now, once again, this is not the only thing that I'm going to look at when I'm trading. At the very least, I would combine this with volume. There are times when you have very low volume and you can still have large body candles, but it is not usually like that. And that's normally something I might see in after hours potentially. But even then, normally we have a strong correlation between volume and candle size because it says that a large amount of people are willing to buy, right? These stocks, and it depends also on the float of the stock, how much volume it's going to take to push through. But one of our secondary major indicators is going to be the volume. And you can sort of see that through the candles and specifically the body size of the candle. So, and it goes the opposite too. So we can have something that has very little momentum after a certain point and gains momentum. And we'll see that once again from looking at the size of the body. And then last but not least, as we look at these candles in unison or just together, noting that a candle goes from a large body and starts diminishing over consecutive time periods will be an indicator that, hey, maybe we're losing momentum on this trade. Maybe it is time for me to sell out. And on the opposite side, if we are gaining candle size, I mean, come on, who doesn't get excited at the view of a very large candle just continuing to form, right? And then the last thing I'll say on this is it's super important to remember to not jump the gun. Whatever your time period is, we have to let these candles finish forming before you can form an opinion on the candle pattern. And so many times, at least I myself have started to see a candle look one way, and 50 seconds into a minute candle, it just completely flips the opposite way, because this is just an aggregation over a time period. And we have to let that time period complete before we can get a complete picture. And it also explains so many times why I talk about confirmation of the trend, right? One candle is not a confirmation. For some people, it's 3. For some people, it's 5. For some people, it's a 15-minute candle is what they will look like. 3 15-minute candles is like the standard old school version of confirmation that I know. I might use smaller time periods. However, that just is to my unique trading style, and everybody should have their own. So, other momentum candles and just the way things will look. So we have this pattern called 3 black crows. And the opposite version of that is called 3 white soldiers. And this is basically when we're looking at 3 candles of similar size that are going to trend in a direction. Let's go with down for now. Once we have these 3 candles, like I said, where people will use 3 15-minute candles to establish a trend, I believe the number is 68% of the time there will be a continuation of that downward trend pattern. This doesn't mean it's always going to happen. It doesn't mean it's never going to happen, but this is showing, hey, this price is continuing in this direction. And on the flip side, these 3 white soldiers, or whatever, it doesn't matter. Why do they got to be white though? But these 3 white soldiers are once again a confirmation, hey, we can look at this and reasonably assume that the buyers are beating the sellers right now, and that there's confidence to continue in this uptrend of this market, especially depending on how large of a time period you're using. Now, if you're going off of a minute, these candles are really just something that are going to go on top of all of your other statistical, your analysis. However, the longer the time chart, the more you can find convergence, or just that you have multiple confirmations across multiple time charts. Patterns like this can start to mean a lot. Oh my gosh. Okay, indecision candles. So indecision candles, the number 1 candle I'm going to talk about, at least today, and as we go through our patterns, is called a doji candle. And the doji is represented by having an open and closed price that are extremely close together. Now, sometimes we'll see very long wicks on a doji, and that's indicative of something. Depending on the length of the wick or the direction and place that it is in the chart, that can be a momentum indicator. And same thing with the 4 price doji, where we have a high and a low that is very close, as well as an open and a close that is very close for the day. Now, usually I only see 4 price dojis in aftermarket when we have extremely low liquidity and volume, and there's just not enough to make the price really do too much. But very often, I'm sure we've all seen doji stars, or the long-legged style of doji, where we just have very high wicks, but very little difference between opening and closing price action at the end of the day. Now, the dragonfly doji and the gravestone doji are fairly particular, and I'll talk about each of them individually. So the dragonfly doji is somewhat like the what is it? It's like kind of like a hammer candle almost. And we'll look for this at the bottom of a downtrend, right? And this shows, much like that hammer pattern, it says, hey, people tried to bring the price of this lower. They tried to continue selling. But we had our buyers that were so strong that we brought it back up at least to the price that we opened in. And this is, hey, we might have a potential, in the constant fight of the bears and the bulls. Well, the bulls are stopping this downward trend. And the gravestone doji is the exact opposite of that. And we usually see that after a long uptrend. And that says the same thing that the hammer on top says, basically, which is we had a price that we opened and we tried to go higher, but the bears are winning. they have brought us right back down, and we are closing at the price that is exactly the same as our opening price. And so now I want to look at some examples just using those few candlestick patterns that we've talked about from our watch list on Friday. And if anybody has any questions, you can kind of ask now. Okay. So I want to take a look at some of the charts that we talked about on Friday, and we'll just look at it from that. Now, with all of our watch lists, you have to do your own due diligence. We're not financial advisors, and we've never said that. And I've never said that these are things that you can just go and buy and you're going to be great, right? But at the same time, if you're doing your fundamental analysis, if you're kind of looking at these charts and you see us also looking at the same charts, hopefully that can be a confirmation that you're looking in the right direction. We do the watch list every day because every day I'm recalibrating and looking for things that are going to give me at least some volatility and some price action. So number one, because I just can't stop talking about it, we're going to look at PLTR. So here's our candle for Friday, and here was our candle before Friday. Hey, can you guys see my mouse when I'm doing this?
Yes.
Cool. Okay, so just looking purely based off of candles, right? We can see, hey, this thing downtrended. Now we know this E here on the bottom of this chart stands for earnings, right? And this is just on a daily chart. Sorry, that's what I'm looking at. I'm looking at a chart. Each of these candles represents one day. So here we go. We have the 3 black crows. We continued to downtrend after that. We actually gapped down underneath that. We had an earnings day. And after that earnings day, the next day was this hammer. Now, looking at that, I would say that we had automatically I'm already interested in this stock, right? Are we going to see a slowing and a reversal off of this? Now we know that because this candle is red, that we opened and closed lower. So this isn't giving me confidence, but I am still seeing some level of indecision inside of this. Now here we have this doji, and the doji is very significant, right? Okay, cool. And not only that, but look at the low wick on this doji. It is not very long, whereas the high wick is a lot higher. So if we really think about what the pattern is represented behind this doji, we opened, we tried to go lower, it didn't want to go, and if we looked at the news and our fundamentals on the whole other side of that, people were talking about PLTR. Kathy Woods bought PLTR, right? So we have kind of some fundamental reasons behind this as well to think this might actually be a good place for a reversal. And look at that. The next day we opened over the height of that entire last day. Not only that, we engulfed the previous day and closed at a height that's in the middle of even the day before that. Right now, and that's just me looking at candles. So let's kind of zoom in and see what we can see on a tighter chart. 15 minutes. Okay, so I hope this is kind of clear. But what we're looking at is 15-minute candles, and the blue lines are showing the difference between the days. So what can we see from this? Well, initially we had a gap up from the previous day. And in that 15-minute candle is like a very strong candle. We gapped up over that and had yet another, gosh, let me zoom in, you guys. I'm sorry. Okay. So we gapped up, we gapped up initially from our closing of the previous day, and it's represented exactly as we saw with that doji candle from the previous day. We gapped up, immediately opened, and took from 26, we opened up to 27 immediately. The next candle after that goes from 27 to 28. Now we have a selling pressure candle, a doji, right? But what type of doji is this? Well, it's the dragonfly type of doji. Shown, oh my gosh, God, why is everything just moving around on me? Today is the weirdest day for technology. Shown by the fact that we have this long tail, so we have a very low, we had a low that intersected with our previous candle, and the buying pressure was so strong that we closed at exactly the same level that we opened at. This was the candle for us. If we were purely trading off of just candlesticks alone, this might have been our indicator to say, hey, it might be time for me to take a position, right? This wasn't the 3 white soldiers thing, but if we're just going off of candles alone, that doji candle after that pattern was very indicative. And look at what happened afterwards, right? We had a run that took us straight from that 28 level, up to almost 30 before we saw this large, once again, bearish engulfing candle, right? And look at what happened from there. Just going off of our candlestick reading. Well, we engulfed the entire price and we continued to downtrend immediately afterwards. What came after that downtrend? Oh, we saw a doji. After we dojied, we once again came up. Now, this isn't to say that the doji is the only thing that would have told us that that was going to happen, but it's just a piece of information that we can use. We could have traded off of this. We could have traded off of both directions just looking at candlestick patterns alone. And this is on a 15-minute chart, right? I'm not bringing you guys down to the 1 or the 5 or the crazy day trader moments. You can trade off of daily candles. Let's look at another one. Let's see here. I feel like it was such an easy chart. And I just want to start from the daily, and we'll come back down again. Sorry, I've also sort of been drawing on this. So if we look at the daily chart, and this is also why I pay attention to earnings, right? Elaine, do you trade earnings? No, I don't trade earnings. I think that they're gambles. However, I still pay attention to every single earnings. I want to know whether or not they met their EPS, whether or not they met their forward guidance looks good. And at the same time, I can always play the reaction from earnings. There's no need to get in. If we looked at this, there's no need to get in. So looking at this chart from a pure candlestick pattern again, look at what we can see here. Well, we had our earnings day. We had a little bit of a sell-off during that day. We gapped way down. And here we are again, looking at this hammer candle, showing that not only the selling pressure was still there, however, we opened, we went down to a low, and we came back and still closed above that open. This was a potential for a reversal of the price action. Also, if we look at where the price action is from the, before this, right, we have a solid uptrend. So this little sell-off here would have been a buying opportunity, and it was. And look at what happened the next day. Wow, we had this humongous, large candle showing just how happy everybody was to continue buying, right? That buying pressure was shown. Now let's look at it on a 15-minute candle chart. So once again, Once again, we open up, there's a gap up from the previous day. Now, a lot of times I don't really even think about what's going on in the first 15 minutes of the day. But I do like to look at it and see how we're going to settle. After 15 minutes into a day, we're usually establishing some sort of price direction. And it's nice to see that this candle opened, it had a long wick down, but it continued and closed up. Now we have a doji here, next candle. Okay, indecision. I'm not sure whether or not we're going to go. And also we have a candle, this red volume bar says the sellers outweigh the buyers in this one. Now we have a hammer candle, right? And it's a bullish hammer candle. And we can see, right, I'm not going to talk about volume, I'm just going to talk about candles. But we can still see that the bulls won in that candle because it's green, right? We have another doji candle, except for this time it is green again. And last but not least, we have one last doji candle that is red, but this is after we had this bullish moment. We're still continuing to rise in price, barely, but we are. And then all of a sudden we have a large bullish candle with no real noticeable wick. There's a tiny wick at the top, but not much. Now, once again, if we added this along with our fundamental, along with looking at the volume, along with seeing that whenever we have these buy candles, we're seeing very large of volume, and when we have the sell candles, it's not continuing to grow, right? I'm not seeing any momentum one way or the other, but I'm also not going to go bearish just based off of looking at my candles on this one. Matter of fact, I'm secretly trying to become bullish on this purely because I see this indecision, but on both sides of indecision, I have bullish growth shown by the sides of the candles. Now, we took this bullish candle and then once again, a little bit of indecision, doji, hammer candle, bullish, hammer candle, bearish, doji, two bearish hammers, or I think this is called a morning star or gravestone, there we go. And then all of a sudden, here we are, our three white soldiers pattern, showing us not only are the bulls winning, but we have very consistent momentum. Not only that, but there's no wicks on these candles, and that's important. Candles with no wicks say that we didn't have much of a high or much of a low. People have bought straight through and continue to buy at that level, and we're closing at that level because buyer confidence is high. So we had our three white soldiers candles, and at least for me, from just a pure candle perspective, this might have been the indication to buy here, right? Now, had I been doing other things, maybe I would have bought here. Maybe I wish I could have bought here. I definitely would have been looking to buy after we had this large bullish candle here, but this indecision afterwards, I'm not quite sure about that. But this first candle here, a bullish engulfing candle, engulfs not only the previous candle, but it does. It engulfs two of the previous candles. That's a great sign. The second candle, okay, now I'm really seeing a confirmation of trend. We've broken over the price of all of the resistance that we had in this area, and we're continuing to move up. And this last one's saying, hey, this is a trend. I can confirm that we at least have uptrended at least this far, and I have a percentage, we have a decent percentage chance of continuing this uptrend just based off of looking at the candles. And look what happened. Wow, we had a great day following that. I'd say that this was the #1 stock on our watch list for Friday, which once again could have been traded purely using, one type of indicator that is the most basic one. Let's look at Roku. Now, Roku was a little bit of a different story, but it's the same thing, right? They had an earnings report. Wow, that was weird. I just lost my train. They had an earnings report, and we're looking to play the reaction. Oh, right. What happened with both Roku and Baidu on Friday? They had price target increases from analysts. They both got over $100 price target increase for the end of the year. And that was important. That was my fundamental reason for even wanting to look at them. They beat earnings, and they had a price upgrade. Okay, cool. Kind of got something that I can believe in. Now let's look at it on a daily chart. So on this daily chart, we can see a couple of things. Now this isn't the pure straight up sort of looking thing that we saw in Baidu where it was extremely clear, but we can still see that we have a chart that is trending up, right? It's trending up, it finds some sort of top and resistance, it breaks back down, it hits off of a moving average and continues up. And even if we didn't look at moving averages, which maybe I don't want to get rid of it. Even if we weren't concerned about moving averages, we can still see we have strong price action, consolidation, followed by some more strong price action, right? Overall, the trend on this thing is up. That's what I like to see when I'm even looking at stocks in the first place. Now, here we have a lot of indecision in this area. People are wondering where to go. And we know that in the run-up to earnings, you can see that a lot, right? A lot of indecision. Okay, here we have a doji. Here we have not really anything, but it definitely engulfs the previous one. Here we have that bullish hammer, doji bullish hammer, and so maybe the price is going to continue up. Oh, the price did bounce off of that, but once again, we're seeing a rejection here. Now, we have a bullish hammer, and there's a very long tail on this one. The tail of this one even corresponds with some of the previous price levels that we've been rejected from, that we come down from, that we could not pass originally. And then we had a breakout that blew past this price level. So when we blow past previous resistance points in general, I expect there to be some sort of consolidation pattern. And lo and behold, there was, right? We consolidated. We tried to figure out where we're going to be. We went up, we went down, we're not exactly sure. And we still can't be sure. However, just looking at the way the candles broke out, I at least saw this very long hammer candle. And this tells me that there was selling pressure. Not only was there selling pressure, but buying pressure, but the buying pressure is continuing to grow. Shown by, hey, the body of the next candle is higher. Shown by, look at the long tail once again on this candle representing last Friday, and look at how far that candle went to engulf both the prices of the previous 2 days. We sold past those, and then the buyers bought it right back up. I like this. I like seeing that the volume is growing as we're continuing to look for more break. So let's zoom in and see what we can see here. Now, if we look back and we look at the past 2 previous days, once again, we can see that we're trading inside of a range, right? And it's a fairly tight range because we're looking at a consolidation pattern. We've broken over some price level, and we're looking to see if we can hold that and continue to uptrend. And the bears and the bulls are trying to decide, hey, which one of us has higher levels of conviction about this? Now, we can tell here, because this little E represents earnings, that this was moving into an earnings. And as we had our earnings report on the morning of Friday, well, we opened down. The first thing I see is we have a very large bearish candle, right? Extremely large compared to the size of all the candles for the rest of the day. This is very indicative. I wouldn't have entered this trade, or I might even be looking to short. But we knew, and we talked about it, that the price target for this stock has been upgraded. So what I expect on the other side is maybe there was some sell-off. Maybe people still had orders to, that they were going to close regardless of whatever happened based off of the earnings report. But then as we move into the day, we see that there's a continuation of volume. So let's look. We have another doji candle right after that representing indecision. Then we have our bearish but selling hammer doji, right? Which says, hey, we opened at a certain level, we went down to the low here, and we closed below it. These 3 candles just by themselves for me would have been a bearish sign. Here is the potential for reversal, where we see the doji right in there. And that doji after these 2 large bearish candles shows me more than ever that there really was just a lot of indecision inside of the market. There's an indecision of how people were going to react. And and so now we would have to have looked for some other indicators, or something else to tell us, hey, are we really going to be looking for an uptrend after this? And lo and behold, we start to see some signs of the potential for an uptrend, right? We see another candle that has no lower wick. So that means whatever price was the low was also the price that we opened at. That would have given me a lot of confidence. in saying, well, maybe I'm not losing out on this trade after all. Maybe there is some potential. Maybe I can actually look to take a position. We saw yet another doji candle with the same. We saw yet another doji candle, followed by a dragonfly candle, right? That had very, very little bottom wick, some level of upper wick, and the body once again that is opening and closing above our previous candle. Now the next one would have been the one that would have had me interested, if I'm going to be honest. And it's this candle right here, where once again we're opening and our open and our low of this time period are at the same level. This is a strong indication that we're going to see, this is just a strong indication that the selling pressure is not very high at that point. Right? People can't even bring the candle farther down past its open. That's very indicative. And also, the size of this candle, it is bigger than 1, 2, 3, 4, 5, 6, 7, 8. It's bigger than every candle except for the candle that we opened at. And that opening candle can be misleading, just depending on, a lot of times what's going on at the open is that we're still seeing orders from the previous day get completed. We're seeing a discrepancy between the price of yesterday's close and today's open. But that we have this large green candle gives me a little bit of hope. And look what happened directly after that. And that's even with what happened directly after that. Well, we had a very large green candle once again that opened above the close of the previous. It opened above the high. It gapped just the slightest amount and continued to move right past the top of our opening bearish candle. Now, if we look at how the rest of the day played out, had I taken a position here, there was very little potential upside to capture as we move through the rest of the day. But I think this is still, once again, a consolidation pattern. Right? So there was profit to be made. Once again, still just looking off the way the candles move. Now, had you only used this, how much profit would you have made on this? Not all that much, to be honest. But it was still possible. And I know that, well, I know that people are still trying to learn technical analysis. And I think that it's important that we just start from one point. If you just start to look at candles, you just start to see, how can I incorporate this information in the way that you trade normally? And we can start to build on this, right? This is not the end-all be-all. It's just something that should be playing in the background while you're looking at a chart, while you're looking to take a position. Oh, hey, I saw that gravestone. Oh, hey, I look at this and I see that the buyers are kind of outweighing the sellers at this point, and we're looking to create some bullish momentum. And you can only get this from candles. I mean, you can get it from a line chart, you can get it from other places, but the way that candles present this information is really succinct and clear, and it's made for you to be able to look at it and easily determine these things. We'll look at two more, and then we'll call it, and I'll see if anybody has any questions. So, VCNX was another one of the calls on Friday, and I wanted to pick something. Oh gosh, I wanted to pick something a little different. Now, I normally don't trade pharma stocks, and based off of, look at how crazy this price action is, right? Let's see, zoom out. So very interesting. I also like to look at how companies have done next to their previous earnings, and that just gives me a little bit of information to go off of. Hey, does this company run every time we have earnings? Does it not? Does it sink? And this is with me not necessarily even knowing whether or not they met their guidance or didn't manage to hit it. But if we look, okay, the last time this company had earnings, we had a large bearish movement, and then right after that, kind of a little bit of a sell-off consolidation, a sell-off into a consolidation pattern that gapped up and then broke down again. We look at the last earnings before that. Okay, they had a little bit of a bullish movement, and then they continued to consolidate. And because this is a pharmaceutical company, I assume that this price action is always going to be more about FDA approval for something as opposed to just pure earnings plays. And the more outside information that you have to take in to understand price action, at least for a technical trader like me, I like things that I would like to be able to look at price action. I would like to be able to look for one or two simple news catalysts and be able to make my trade off of that. So having to add extra things can just make it difficult. It can mean you need to look at other factors. when you're looking to enter a trade, specifically on pharmaceutical companies. I mean, this is the nature of that play. And I'm not going to talk about the obvious difference in volume and what that also entails. Anyway, so once again, we had a gap up here. We came back down, and this long kind of slow, barely uptrending. I mean, it is uptrending. It's barely. It's not moving very fast, but it's not consolidating. We're moving up, and we're moving into. There's an earnings coming up on the 17th of March. So I know that this was a stock that came from a scanner, right? It came from a scanner, and that scanner was looking at morning volume very clearly, because we look at the volume for the day, and it was just ridiculous. But let's zoom in and see if we can see anything, because I'm just talking about how can you trade off of our watch list using one level of technical analysis, and that level is only going to be candles. So looking at this here, to be honest, as we moved into the open of the day, we see this large candle, very low bottom wick. And that shows, strong buyers. Okay, I'm kind of confident. Maybe that volume scanner worked out. I'd love to see a confirmation of this trend before I hop into this trade, but man, that's a really exciting candle for sure. First thing of the day. We went from 485, we went from 593, and the height of that candle before it closed was 836. It was a $3 candle. And the next candle right after that is another very large green candle showing, once again, exuberance in the market, a lot of buyers. Now, the thing when you trade stocks that come from a scanner is that a lot of people use similar scanner settings to look for these things. And so I would expect to see a large candle in the beginning of the day based off of, especially off of a pharmaceutical thing. I expect there to be a large amount of exuberance. The question is this going to continue? Is this a trend, or is this a pop? And so many times for pharmaceuticals, we have to trade pops as opposed to complete trends. And look at what happened here. Well, we had a large, and this is called like a tweezer pattern, but it's a 2-candle pattern and not a singular one, and so I'm not going to go deep on that today. But here, once again, we have 2 candles that we had a close. So this candle opened here, closed here. We had a close that was very near the open of our next candle. But what happened? As opposed to what happened in the previous one, this is a very large bearish candle. Now, it's not engulfing, so I'm not sure where I want to go on this, but had I been in for these 2 candles, this one would have given me a lot of pause. Now, as we have this next candle here, once again, breaking below the open of our previous large bullish candle, even more so. And once again, as we look to the, the diminishing size of these candles, I'm already seeing that there's less people interested in it, right? Our overall volume is going down because the overall size of our candles is also going down. So we have 1, 2, 3. Okay, now we have our 3 black crows. I believe that's what it's called. Like I said, 68% chance that we're going to continue a downtrend if we see something like that. And look at what happened for the rest of the day. We continue to downtrend. If we look at how the volume was on these candles as well, once again, a continuation of the downtrend. Now, and we can look inside of this and say, hey, look, there's a doji right there. And that doji would have maybe given us pause, right? Had we taken our short position at the bottom of this candle here, we still would have gotten, let's see how much. Oh my gosh. Yeah, we still would have gotten a whole, $2.23 of price action. I think that would have been a decent short on a stock that, is only worth $8, right? Overall, the candles, once again, would have still given us at least a little bit of information and ability to take a position that could have been profitable. Let's look at Caesar. So another interesting chart for sure. Let's zoom out and look at it on the daily. Okay, so we have earnings coming up next week. That's interesting. So if we look overall in this chart, once again, we can see that we have a nice uptrend. It's not moving at a crazy speed, but we are trending up. all the way from July of last year until now, right? And there are definitely places where we've dipped, but the overall trend is up. And in general, how do we know that? Well, we've been talking about gambling. We've been talking about sports betting. We've been talking about online. There's a fundamental reason why I was interested in this company. And then first thing in the morning, we heard some guidance about that we were going to see some more legislation on an international level from Canada about increased whatever the legality of online gambling for them, right? And I know that these sectors run together. So if Penn, if MGM, if DraftKings is running, I expect some of the other ones to have the potential to run. And look at what we saw. So now that we've seen that, let's zoom in a little bit here. Okay. So let's just look at the previous week or so. We've ran up and we hit a high. Now, that's no problem. We were supposed to go up, hit our high, come back down, consolidate, and then retest. That's what I expect for something that has fundamental reasons to be uptrending. And look at what we did. We ran up, we hit our high. We had that hammer doji, that bearish hammer doji on top. We started trending down. I see a little bit of indecision in the next day, but the following 2 days are definitely bearish days where the price is ending lower than our open. And here we have some indecision, right? We have a bullish day, and it engulfs the entire open and close of our previous. I like to see that. Then we have a bearish day, which isn't engulfing, but it still is a very strong bearish candle with very little wicks, right? I don't like the way that looks at all. Here we have a doji. A doji candle with a fairly large body, but I'm still going to throw that in there and say that we had a wick, a long wick that closed below, gosh, this is actually taking us all the way back here to a previous resistance, a previous support and resistance, gosh, that we not only got stopped out at, but broke past. And so looking at this particular wick on this candle, I like the way that this looks. This is giving me some confidence that the price isn't going to continue to go down. We're reaching a decision level there. And we held and moved up. Now, the next day, once again, not a completely bullish candle, but we still had some nice growth and momentum. And now that takes us to Friday. So let's see what we can see on Friday. Interesting. What a day. So if we look on Friday, just off of our candlestick action, we opened up down. Now this isn't a strong downward candle like we just saw on, I think it was Roku that opened like really strong, right? We saw a really strong bearish candle when we looked at Roku. This one has the wicks on both ends. And we can see that the high of the day, or the high of that particular time period, was almost the distance away of the body of the candle, whereas the low of the time period was not nearly as high. And we still bounced back and came back from that. And if you look at the closing candle from the day before, we had selling pressure, right? We had a sell. And the low of that day did not even correlate to the open of the previous last time period. So there's potential to look at this selling candle and still be bullish, right? As we move into the next candle of the day, we have a tail, but no top wick on this. That's exciting. I like to see that our closing price is right where the high of the time period is. This is a very bullish sign. Next, we have a definite doji, right? An indecision thing, but inside of that indecision, we're still trending up. Well, not really. But the open is above the close of the previous candle. right? And they tried to sell off. We tried to go down. Sorry. We tried to go down. We tried to sell off, but the buying pressure was still high enough that it was an indecision candle. This is a doji. And looking at it after we see an uptrend of, hey, they tried to sell. We still opened over the previous day's close. That's great. Here we have buying pressure. All right, people were not, the buyers continued to have pressure and push the price action of this up. We opened here, we closed above that. We're almost above the entire wick of our first candle. And now we have some indecision, some indecision where it still ended at the close being lower than the open, however, not engulfing. And tiny wicks saying that there isn't a lot of volume there, right? We had significantly more volume and body on the candle previous. And now look at what happens after that. Well, we have a solid uptrend. And this is off of looking at two candles that had selling pressure. So there's a way that you can look at some candles and say that even though this candle is red, even though we had a close that was lower than the open, I can still look at this and maybe be kind of bullish, right? Given just off of looking at the candles and some technical information. But this isn't looking at volume. We're not looking at where we're at on the chart over the 200 MA. We're not looking at, any of the other factors that we might be looking at. I'm not doing Fibonacci. I haven't talked about support and resistance. Just off of the candles, you can still be bullish in this situation. And here we are. We continue to uptrend. So 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 6 green candles. That's a great sign. And here we are. We have once again some bearish interference. And this is a fairly large candle, right? So maybe had I entered into a position here and looked for some of that upside where we went from, let's say 80, 81 to $82, almost $83 at the high. And at that point, after you see 6 green candles, it is time for a little bit of a consolidation period again. These are stocks. They don't just go straight up and they don't just go straight down. So cool. We saw some trend. We saw the potential for bullish movement. We confirmed that bullish movement. And then now we're having a consolidation and a pullback period, which is totally expected. Now, if you're the sort of person who, like me, wants to get the most out of every single one of your trades, you might not have sold here. And once again, even as we're looking into this bearish movement, let's look. We have 1, 2, 3, 4 doji candle indecision, not really reading too much into it. 5. We have 5 candles that still do not take us outside of the distance covered by these 2 green candles here. Right? So as much selling pressure as there is, and as much as they are closing through these 2 periods, as much as they are closing below in these time periods here, that pressure is still not enough to take us past the height that we gain when we grow in these 2 candles here, right? And it just can talk about, once again, the emotion and the way that the selling pressure, the difference between the selling pressure and buying pressure in the market. We had some very strong buying pressure that took us, from here all the way up here. Let's see, what is that? $80 to 83, right? And then this selling pressure took us from 82.92 down to, at the low, 81.52, 82.92, 81.52. So it's $1.5 of selling pressure versus $3 of buying pressure that got us to the point that we are at now. I could still, once again, be bullish on this. We haven't seen any sort of bearish engulfing candles. We've seen the potential for reversals here, especially in this downtrend, and then we see a dragonfly doji. Oh man, I'm once again excited. Is there more indecision? Is there more upside? And also, we rejected off of a whole number. These are things I expect. And here we are once again. We see our 3 white soldiers, and we continue to go past that height. We break out, and we close the day a whole, at $83.31. So had you sold here or here, knowing that, you didn't like the way that candle looked, it is a fairly large bearish candle, that would have been a great trade. Had you held through knowing that, hey, I'm looking at these candles, the selling pressure isn't actually as high as I would expect to see a complete price reversal, and looked, oh, hey, you know what, I see a doji, I can be patient, I want to see how this plays out. you would have still been rewarded with even more upside. And this is all, once again, just based off of reading candles and talking about the very basic candlestick patterns that we talked about today. I think that's it for today. I really appreciate everybody for coming, and thanks for being patient with me because I've been having so many computer issues over here on my side. But does anybody have any questions, comments, hot takes on just looking at our candlestick action and comparing it to our to our watch list that we did on Friday? All right, and if we don't, well, that is going to end it for today. Like I said, I appreciate everybody for coming. We're still working on a lot of material to make this seminar as robust and as inclusive of all the information as possible. We're definitely going to continue doing these Sunday classes regardless and trying to add value that way. But even more, I just want to continue to make this information even more succinct and direct. So I'm happy that we can start actually looking at charts, and I really want to start building on our bag of indicators, on our technical analysis, and also our fundamentals. But I'm just such a big fan of technicals, and I know that regardless of whatever trading style you have, regardless of whatever time period you have, having better entries, having something that just gives you, hey, you know what? Oh, I saw that doji candle. I saw that indecision. I looked at that bullish engulfing candle. You know, it gave me confidence to enter into my position. I looked at that price action, and we did not actually break past the largest bullish candle that we had previous. All of those things can just help you no matter where you're at and no matter what you're looking for. So with that said, thank you, and I'll wait one more time for questions, but if outside of that, I hope you all have a great day.
Yeah. So I guess there's no questions. Once again, thank you everybody for coming. We will be on air tomorrow morning and every morning or every trading morning, an hour before the market opens. We also have our afternoon show at 5 o'clock Central Time every day as well. The Trade Like a Pro seminar is coming up quickly. Tickets are still on sale. Go to our Instagram and there's links to that. We also launched a YouTube this week, so if you haven't already, go check it out, catch up on old episodes, and subscribe. Thank you very much, everybody, for your time.